The food and goods wholesaler Massmart posted a sharp rise in full-year earnings. Company CEO Grant Pattison joins us for a closer look at their numbers and issues in that sector. Hi Grant, it's always interesting, and I always like to ask the question, there's always a reason. Either you've done extremely well at getting profit out of the business. 53 weeks to December 2013, you had sales up by 9.8%, but your earnings and your profit up by much more. Operating profit 26% and earnings up by 29%. Now I know there's an extra week in there somewhere, but that can't be the full explanation for the difference between revenue and a good profit and earnings number.
Yeah, that's right. It was actually a difficult period, and the core earnings are flattish to down. What caused that bump is you get that extra week of sales, which accounts for about half of it, but also the rand's weakened. And this time a year ago, we had quite a large foreign exchange loss because of the devaluation in the Malawian currency. So those are the two major effects. Still quite a tough time, actually.
All right, so when you're talking to each other in the business and you're not talking to us, you're saying, okay guys, let's get real here, and let's say if the revenue is 9%, things are flat. Is that what you're saying?
Yes,
I mean, inflation is 6%, revenue up by 9%. So it's tough.
It's tough, yeah. You know, the way to measure, I think, all retailers is what is their comparable sales growth, and ours was 3.4%.
You mean same stores?
Same stores, so comparable stores, comparable period, 3.4%. And everyone knows that wages go up at 7% and rents go up at 7%, so you've got a gap. And we have been, for the last few years, managing that gap, and that's the challenge of the business at the moment.
I've asked you before, and it's quite a while since you and I chatted, the Walmart effect. And how long is it now since Walmart came in and you started working with them? How long has it happened?
So we're coming up to the 3rd year anniversary of the Competition Tribunal approving the deal.
Right.
It feels like 5 years because it actually started 5 years ago.
Also seems like yesterday in another way.
Yes, I'm sure. Well, maybe to you, not to me. But so the Walmart effect is interesting. You know, if you came to Massmart 5 years ago and came now, you would see almost a completely different company in the way it operates. So we have really integrated with Walmart. We've done some stuff we could say could be attributable to them, you know, putting fresh in, being a food retailer, the way we talk, the way we manage. But as time goes on, it becomes more and more difficult to figure out what's Walmart and what's Massmart. So I think we've got to the point where internally we don't talk about it anymore. We really are Walmart.
Well, you did talk about fresh there a moment ago, and that was definitely a new departure for you.
Yes.
So how did that go? How has that gone to now?
It's gone very well. You know, again, I would have to tell you how would fresh have gone without Walmart and how would have gone with Walmart. But certainly with Walmart, and in particular our colleagues from Asda, we've managed to essentially build muscles where we had none. We knew nothing about fresh 5 years ago, and here we are, not a brilliant fresh retailer, but certainly in the game. You know, between all our fresh categories, we're certainly over R1 billion now, and that's a real business.
Looking at a lot of the companies that reported, and the retailers are no exception, if there's good growth in the numbers, both revenue and earnings and profit, very often it's about outside South Africa. So the South African part of the operation is pretty flat or disappointing, but there are bigger growth numbers in the continent of Africa.
That's correct. So whilst our total comparable sales is 3.4%, probably outside of South Africa, in rands, it's probably about 20%. So yes, Africa is growing faster than South Africa, somewhat because of the weakening rand. So I would say the underlying growth outside of South Africa is 10% comparables, but it looks like 20 because the rand weakened.
What have you found going into other African countries? Whether it's a Walmart way, a Massmart way, or both, there's a way that the company has to develop when it goes into a place.
Yes, let me just say it's very, very difficult. The issues you have to face operating as a foreigner in a country are complex and vast. We've well practiced, we know what we're doing, we have expectations that things are going to go wrong at times. We just can't tell you in which country. The biggest risk we've learned over time, so the biggest learning is that the thing you've got to watch closest is currency liquidity. Because of course making lots of money in a country and not being able to get the money out is a waste of time.
Well, the one thing is the value of those currencies. So as the miners know, or foreign investors know, with our rand and dollars and pounds and things. But of course with you, if there's a lot of liquidity, you could actually you go in operationally, thinking of all the interesting operational challenges, and that's not where your problem is.
Correct.
Also, are there issues about getting the money out, of actually repatriating it?
Well, it's both of those. And so our 20 years of experience have said, we've got to watch it closely, and you need some lead indicators. Because once it's happened, It's too late.
What are the lead indicators have you found?
Well, we are starting to look at the behavior of the reserve banks, because of course they control the bureaucracy of repatriation. And if they start, adding new rules and tightening things up, it's probably for a reason.
What about, I always think of when I was at SA Breweries, the model for them was to send a brewer, a financial director and a managing director. And the rest you hire locally. You get people who know the local business, who are experienced there. And rather like Brian Joffe, who we talked to a bit earlier today, you get them, you don't change them, you get them to do things differently. How many people from South Africa or the United States go into these African countries?
We pretty much send in, probably when we open up a store, the senior management team, which is maybe a store manager and 2 or 3 other people. But we've been in many of these countries 20 years, and so half of our entire management teams are locals now.
You say in the commentary that actually, even though things have been flat, it's been a stronger start to the financial year than you expected. So that doesn't quite sound like reflected by the numbers, but better than expected.
Yes, I must tell you, to being a bit surprised. Maybe that's somewhat because it's been hard for so long. We are in disbelief that it's looking better. But yes, that number 3.4% that I talked about last year is 7.7% for the first 8 weeks. Now that's a proper number. It's about what we would normally expect. So it's not as if it's brilliant, but it seems to have gone back to normal levels. If that continues for a year, well, then we're going to have a good year.
Well, that's certainly encouraging for a company of your exposure, because you are something of a barometer. Let's look at the macro thing, the budget. I all business people have to look at the budget. Was there anything that pleased you that you weren't expecting there, or any things that stuck out?
Well, for us, I suppose, the thing that's nice about the budget is it didn't really change a thing. I know there's some explanations of, well, we've given more money to social grants, which is important to us, or we've had some tax relief on the brackets, but really both of those are just inflationary adjustments. So I would say the positive thing for us is it's completely neutral on the consumer.
And the market seemed to agree with that. That's what the commentary has been. Thanks to Grant Pattison. He is Chief Executive of Massmart Holdings.